All right. Yeah, thank you everyone for joining. So let's look at the markets first at an overall level where we are. So I think the last time when we met, we had these levels marked in SPX, and I think now we are well over this, right? And it fell to when it fell in April, it almost tested the previous high and then bounced up, and this has been a massive recovery, so much so that, let me go to, this is the monthly, right? And it is going into the upper Bollinger Bands here. What I want to do is on a weekly level, I want to remove all the studies, um, remove all studies, and go for something called Keltner channel to see where we are, and how high this can go. So all studies in K, go to Keltner, Keltner channels. Okay, so this is a standard Keltner channel where if I go to edit, it is 1.5 times the standard deviation. The factor is 1.5 here, right? So I'll add few more Keltner channels. And make it 3, and this one would be 4, and I want to change the colors. So for 4, I'll mark it red because it is super bearish once it reaches that level. um, and for 3, I'm going to make it maybe teal. Yeah, and I don't really need 1.5. Maybe we will keep it at 1 standard deviation and make it yellow across the board. Yellow, this would also be yellow, and apply. Okay, so to put things into perspective, when we dropped, it was from here, yellow is 1 standard deviation, and if you see here, red is 4 standard deviation, right? So essentially it fell by around 5 standard deviation. So it was a massive drop when we had the drop in April, and now it is coming to this 3 standard deviation move on the upside, right? And remember, 3 standard deviation is from the median, and median would be somewhere here, right? This is actually the median. So from here, if you calculate a 3 standard, we are already nearing 3 standard deviation move, and this was red, as you remember, is 4 standard deviation move, right? So 4 plus 3 would be a 7 standard deviation move in the markets. So there is no way I can be bullish after seeing this. And let me actually go back in history and see, um, maximize the sell. I want to go for 20 years of data. So again, just to remind everyone, I have 1, 3, and 4. 1 is yellow, 3 is teal, 4 is red. Okay, just remember these. Now let's look at how the previous drops were. Excuse me. How the previous drops were. So maybe let's take the most recent one, right? In 2023, or even this one. Um, this was in 2024, right? So we fell from a 3 standard deviation move on the upside here, teal, to somewhere in between 3 and 1, right? So if even if we consider it 3, so this was close to a 6 standard deviation move, although it didn't hit this bottom here, right? So that is pretty much when it falls, that is probably the bottom. And when it goes up, let us see, from, I'll consider it as a 3 standard deviation move to the downside, right? From 3, it went all the way to 4. So, and if you see, when it hits 4 for the first time here, and let me bring up Demo Pro. Um, yeah, when it hit there for the first time, what happens is immediately there was a drop here, right? So this was a 7 standard deviation move, and it immediately dropped. And remember, this can continue for a long time. And generally, the market is bullish during these months. If you see February to April, that is why we had a continuous journey here. But Q3, I don't expect that to happen. Q3 is generally very, very choppy. If you see here, Q3 of last year, and here, Command A, why is it not coming up? Okay, yeah. Q3 of last year, we had a big pullback, right? And even in August, if you see, market made a top and then there was a pullback. At least a 2 standard deviation move we can expect in Q3. So let's look at the other times. Let me zoom out again. Why is the right click not working? Okay. So that was the most recent one, right? So let's take a look at the 2022 drop and the eventual bounce back. Excuse me. So when it hit a 4 standard deviation move, it immediately bounced up. And how much did we get? It went all the way to 1 standard deviation, right? And this is the midpoint. So since this is the midpoint, you can say that it went 5 standard deviations to the upside. And that has been the case in most of the scenarios. If you see here, this yellow is 1 standard deviation, right? And this is 3 standard deviation. So from here to here, it's a 4 standard deviation move. I don't see any other scenario where market has bounced up so much as it has done now. And remember, this is not a zero interest rate scenario where we had this kind of rally in the markets, right? And even here, when the interest rates were zero, look at how it was. When it hit 4 standard deviation move, there was a pullback to about 1 standard deviation, right? That has been the case, and it never went to this red line. And
Maybe is that 4 or 3, the one that you were just showing?
teal is 4. Sorry, teal is 3. My bad. Teal is 3. So when it hit the 3 standard deviation move, it pulled back to 1 standard deviation. This was zero interest rates and quantitative easing by the Fed, right? The economic policy was completely different to what it is now. And here we are where we have from almost I mean, this drop might even be, let me just try that. It might even have gone to 6 standard deviation. Keltner, let me make it 6, and then um, or actually let this average is the midpoint. I don't want to touch that. So the upper band and lower bands alone, I'm going to make it green. So yeah, it almost went below this red line, right? The 4 standard deviation. And now it is almost at this plus 3 from -4 or 4.5 to +3. This is massive, right? 7 standard deviation move. Let's look at even this COVID drop just for fun. Okay. So on the downside, when was this? March of 2020. This was the COVID drop. We hit a 6 standard deviation to the downside. And on the way up, we hit 3. So this was 9 standard deviation move. It is pretty massive. But again, we had certain pullbacks in between, which were fairly significant, right? If you see here, this was almost a 1 standard deviation move. I don't think we have got even that here. You know, yeah, maybe just one candle here, which is weekly, and it is not even in between. It didn't hit this part, but it pulled back, and it did not even hit this one, right? So without a correction, we have gone too far, and I and the bottom line is we cannot be bullish anymore. I would rather just sit out. And if let's look at NDX for fun, this might even be even more. Yeah, here this was 4 standard deviation, again coming to +3, almost the same story, right? And if you see here the pullback, it's even worse than SPX. We did not even get 1 standard deviation move so far, which is pretty nasty. And how many points have we recovered? This was low was 16,540, 23,540 minus 16,540, 7,000 points almost, which is massive. And I think it is still going up after hours thanks to Meta and Microsoft. And Microsoft itself has been crazy. I don't know whether this is going to be a top for years to come. Um, this 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 is a stock which is fairly boring. It doesn't make this kind of moves, but this time around, it has overtaken all other mega cap names except NVDA maybe. So this has been a massive move. Um, and let's go back to NDX and SPX. I want to do some few things different this time, just to let maybe this is even an educative session to see to learn new things, right? So I'm going to remove this. For some reason, right click is not working with the mouse. Okay, I'll use the touchpad. So here on the, let me go to daily, and I want to draw fib levels. Now we all know fib levels, how to use it, right? You would basically take Fibonacci extension, draw it from the previous high to the previous low, and you get some extensions. And I think tomorrow or this week, we might actually hit this level, 756. And it's pretty amazing. We have gone there in a straight line, with no break in between. But if you believe these fib levels work, why not draw it on the time axis, right? So let us try that as well, drawing it on the time axis. And what you can do is, there is this Fibonacci time levels. So I'm going to take it from the previous high to the previous low and see what we get. I think we are already past this, and maybe here there was a good response where it gapped up, and maybe this was an indication that things will continue.
Yeah.
So I'm going to remove this and try other fib time levels. And go to weekly chart to see how far we can go without taking a break. Right? So I'm going to take the nearest available levels. So from this low to this high, and we get the date 722, but we are already past that, and not by much, by about a week. So before a significant pullback that happened, this is possibly we are near a high, potential high from time perspective. Let me try another way, from this low to this high, and I'm not getting anything here, all the way to 423. Edit properties. Okay. Go to daily chart. And even to draw a line here, I don't see significant pullbacks, right? So maybe we can do from this low to this high, and that comes to 728. So whichever way we look at it, we are in position for a significant correction in terms of time and also price. Any questions on this? Can try one more way. It's not, doesn't work. And to see whether this actually works historically, you can, let's take 5 years of data. So I can do from here to here, and we get, wow, 820 as the date, August 20th. So we are close to a high, which can be a high for a couple of months, if not a couple of weeks. So it's better to stay cautious. Don't be bullish, especially in Q3, which is seasonally one of the choppiest quarters. Yeah, and again by December it might pick up. Santa rally and things like that. In December it might pick up. Any questions?
How long can the indexes stay overbought?
Pretty long, right? When we looked at the Keltner channel in 2021 or 2020 and 2021 during the bull rally, it stayed close to that three standard deviation for many weeks. But right now, the situation is not that helpful in terms of Fed policy, right? So there is no, I don't see that happening now, especially after this kind of rally. Um, so let's look at, if there are no other questions, we can look at few stocks, big cap names. I'll start with Apple. And I want to change the study to
There'll likely be an interest rate cut next month. Would that also push the market higher?
I think probably that is priced in after seeing this kind of rally. If the interest rate cut happens, it'll be sell the news at that time, because Fed has given enough hints that they will start lowering the rates. Um, again, with some caveats, right? They are not committed, but I think they will definitely do two price cuts this year. That's what they have mentioned. So that can happen in September, but at that time, considering where the index is, I think it might be sell the news unless we get some major pullback in August, then the rally might start in September. So we will see just before the Fed announcement where the market is, and based on that we need to decide.
Like we are in a weekly squeeze for Apple.
For Apple, yeah, weekly squeeze is there, but the tricky situation here is tariffs, right? And tariffs from India, where Apple have moved their supply chain to India, and now there is a new announcement of 25 to or more than 35% tariffs. We don't know what is that penalty tariff would be. So it's crazy, but I don't think Apple um, can, and probably that is the reason it is still so, it hasn't recovered, right? Unlike other stocks, it hasn't recovered at all. So out of all the mega cap names, but monthly, if you look at it, it is still bullish, right? So for this weekly squeeze to fire long, as long as it stays above its 21-day moving average, there is a very high possibility that the weekly squeeze will fire long. So keep an eye on this level. Right now, this is kind of a chop zone between 200 to 210. But if it crosses 210, there is a very big chance that it'll go to its upper Bollinger, and the fees, and then the squeeze will definitely fire long. And up to what level it can go? I think it can reclaim this candle. This is the first level, around 225. So I think I had suggested for some people who own Apple stocks to sell calls above this level, potentially 230 or 235 calls is a safe bet if you want to sell some options premium. um, what else? We will look at Microsoft. Yeah, this is already above its upper Bollinger Band. At the moment is at 490, and given that it's the end of the month, August Bollinger Band might start above 520 or so. And considering that it is going to trade at 555, it is still going to be above its August Bollinger Band, which is, once it hits those levels, you can see what happens on a monthly basis. Look at this. Excuse me, where it went significantly over its Bollinger Band, and that usually results in a pullback. And we need to be careful tomorrow. If it cannot hold above, this, even this high, right, 518, or once it starts breaking this 518, there is going to be a major pressure on NQ. That is when I think we have to be bearish. Yeah, if you see here, squeeze has already fired long, and the weekly squeeze, look at this. I mean, this reading of 8,000, it's insane. I don't remember seeing that kind of a reading anytime. Let me go back in history and see. 20 years. Yeah. At no point in history, even, let's go to max so that we get even the dot-com bubble. Max available. Okay. So this was dot-com bubble. A reading of 865. And this is the move it had. At that time, it was pretty high. And here we are at 8,000. I mean, it is insane. It's just insane. I think for NQ to rally this much, Microsoft has been a big contributor. And see, once the price starts moving away from the Bollinger Band, there is a higher risk of a pullback. That's why I like Bollinger Band so much. If it starts closing above the Bollinger Band, generally stay bullish. But once it starts moving away, then it enters a chop zone until a new squeeze is formed. Since this is weekly, here, this sideways consolidation in this box would probably be a squeeze on a daily chart. If you want to see that, this was 2023 from November all the way to January, right? So let's see the daily chart. 2023 we want to see. So I'll take 4 years of data. 2023 November to January, right? So it starts somewhere around here until January. Yeah, see, this sideways move on a weekly resulted in a squeeze on a daily chart, which eventually fired long. That's how you can see. And even here, Bollinger Band is so good. That's why I love this. When something is closing above the Bollinger, stay with the trend, right? Because most likely there is a squeeze that is firing. Doesn't matter. It might be a 1 minute chart, it might be a weekly chart. And once it starts going sideways, you should know that the momentum is getting lost, but it can still make a high within the Bollinger Band. But there are chances for you to play puts. All right. It gave plenty of opportunities for puts as well. And during this time, your best buy zone is usually at the lower Bollinger Band. In a very, very strong stock, which is bullish on the weekly, we saw that, right? On a smaller time frame, the best way to trade this is the lower Bollinger Band. Now we want to apply this to the index. Let's try that. So I'll go to, we all know we don't need to look at the daily chart, right? It has been in one direction for last 3-4 months. So let's look at maybe 2 hour chart. And I want to look at past 90 days. Excuse me. So if you look at this, I was telling don't short this market and stay bullish for a very long time until I turned bearish and burned my hands. But still, the concept remains the same, right? When the daily chart is bullish, one of your best buy opportunities is at the lower Bollinger Band. Here it did not work because the squeeze completely fired to the downside and it came back here. But if you had held longer, it still works. Look at this. Every test of the lower Bollinger Band, because what happens is I haven't done any changes to this Bollinger Band except changing the color. Okay. This is the standard. I think by default, Thinkorswim gives some ugly colors for upper and lower Bollinger Bands. I like to keep it same. So I've selected gray for midpoint, lower band and upper band. That's the only change I have made. And this is a 2 standard deviation move. If you see the deviation here, standard deviation, it is 2, right? So when it comes from the upper Bollinger Band to the lower Bollinger Band, it's a 4 standard deviation move. That is one of your best buying opportunities in a bullish stock. So when I give the levels every day, I take into account a lot of these things. I don't want to give out the complete recipe, but I look at Bollinger Bands, I look at moving averages, I look at Fibonacci, a lot of things. And if you know that these levels are somewhat reliable, then we will see how we can make use of those when we come back. I think there is only 1 minute left. Any questions on this so far?
This works on any time frame, yeah. I mean, when you want to buy stocks.
Sorry, say that again, Akshay.
Works on any time frame, right? When you buy stocks, you're looking at a day, 1 day time frame, right?
I wouldn't do it on a 1 minute chart.
Oh, sorry, yeah, not that low, but something like 1 day.
Yeah, 1 day, definitely. Right. So let's take it. We know Netflix has been on a tear, right? Let's look at Netflix 1 day. So the last time when let's take this, right? It touched the lower Bollinger and it immediately bounced back to the upper Bollinger. It touched the lower Bollinger, bounced back to the upper. Here, there was a squeeze which fired short. So we have to mix it with other things. Here the squeeze did not fire short. So we need to pay attention to this as well. When the momentum is really high, if you see momentum never turned bearish. So this is a calculated risk that we can take. Say you entered short here recording. So when we look at the way gold is pulling back here, If the market starts falling, I think if it hits this lower Bollinger on the weekly, it is a pretty big buy at that stage. There is a weekly squeeze developing. Look for an immediate bounce. uh, I wouldn't know where it goes, where the squeeze will fire, but the first test of the lower Bollinger on a weekly is a buy. After that, second test, third test, I don't know what will happen. And so if you look at, I think we looked at pretty a lot of other charts. Look at this. The first test is a buy. And how many points we got? Even if we consider here 1894 to 1970, close to 100 points. And one contract of GC is, um, even if you buy one contract here, it is close to $10,000 in profit. Okay, so that is the power of knowledge. When you keep looking at the charts, you can make this kind of trades. Second test, as I said, it's not guaranteed, right? When it comes back again, it fell further. So that is kind of scary for anyone who buys it here on a second test. It's not a good idea. Okay, that's about gold. Excuse me. Let's look at silver. It's almost correlated to gold. When I think it has made a high here. This candle is not looking good. This is monthly, and we are almost at the end of the month. So in one day, this is not going to recover. It's a pretty nasty candle. So I do expect this to fall and maybe test 34, right? So if you look at this previous highs, and also by that time it would come to around middle Bollinger Band here on the weekly, close to 21-day moving average. Pretty good place to buy. um, let's look at crude oil. Honestly, I mean, I don't like to trade this at all, and this is pretty bad. The fall here and the recovery, it went all the way up to this, sold, got sold. I mean, it's all over the place. Right now, the weekly squeeze is firing long. So, what I can say is if it stays above 66, which is this 21-day moving average, there is a very big chance the weekly squeeze might fire long, in which case it can easily touch 70 and above, or even 80. Um, I think India and China are two of the biggest consumers, along with US, of oil. And US is not buying anything from Russia, but India and China are buying from Russia. And with the tariffs and penalty tariffs, if India and China are forced to buy it from Middle East, the everyone is going to look for the same source, right? And it is going to put a lot of pressure on supply. Prices will go up if that happens. But if India and China don't care about the tariffs and continue to buy Russian oil, I think this is easily going to fall again. I think right now India is buying oil at around $47 per barrel. And nobody can, I think the Western world cannot guarantee that price to India and China. And obviously, Middle East, Saudi, why will they sell it at 47 when they can sell it at 70? Right. So it's going to be interesting. A lot of politics involved here. I wouldn't touch it with even friends' money here. Uh, don't trade oil. That would be my advice. It's all based on news. Let's look at natural gas. Similar story here. Um, Everyone is going to look for buying from US. I think the trade deal with Europe already has a commitment that Europe will buy $750 billion of energy from US. So it's going to put a lot of pressure on the supply chain. I doubt whether US can drill so fast and satisfy all the demand that's there in the market. So the prices can go up. This weekly squeeze is there, but if this level holds, it's already near this lower Bollinger Band. But remember that this is the second test of the lower Bollinger, right? So it can very well break down here and turn bearish. But if this level holds around 2.89, which is one of the lowest levels, right? If you look at it, anything below 3 is insane. With all the costs that is going up, I don't think this is sustainable for long. The prices need to go up. I think it'll soon be over 4 because of the supply and demand scenario. Caveat being, this needs to hold. Okay, if this breaks, be careful going long natural gas. Any other commodity that we need to look at?
Thanks, Pradeep. Can you
Hey,
cover
nothing.
KRE as well? Wheat.
Wheat, WC, right? No,
KEU.
I've forgotten. I haven't traded this in a long time. Say that again. W.
No, K for kilo.
KEN is
KEU.
wheat, right?
Yeah.
ZW actually. So if it's wheat.
Okay. KEN. See the continuous contract. Why am I not able to see that?
You can, Pradeep, KEU.
KEU.
Yeah.
When this happens, if you look at the weekly chart, it is refusing to, although it looks very bearish, right? It is refusing to close below the lower Bollinger Band in spite of the histogram being very bearish. I think it is a bullish sign that this level is a pretty strong level around 500, and there is a very big chance that it can bounce up in a dramatic way here. Whenever you see, uh, let me go to daily data, and this is true for any. Yeah, let's take this. How to trade with just Bollinger Bands. When it is closing below the lower Bollinger, there are chances that there is a squeeze and it is firing short, and that's what happened here, right? The squeeze fired short, and when the close is not below the Bollinger like this, it fell. It's a nasty fall here, right? From this level to this level, it's a pretty big fall. But look at the way it is behaving here. It is not even coming close to the lower Bollinger Band, which is bullish. Same case here, which is bullish. So this is one way, I like to identify bottoms. See on different time frames when this happens. And I can show, excuse me, I can show a lot of examples in NDX because it has been very, very bullish. When it refuses to close below the lower Bollinger Band, even after a big drop, see this? I think we discussed in the group, right? One big candle, 30-minute candle, red candle, where we all get excited. Yes, this is the fall I was looking for. And then guess what? By the end of the day, it recovers half of that, right? One big fall, but here it did close below the lower Bollinger. But you get the point, right? This one, it came, it did not come down enough for it to close below the lower Bollinger or not even touch the Bollinger Band. That is, in my opinion, a very, very bullish scenario. I can go back and look at maybe 30 days of data to see some more examples. Yeah. See a big drop. It is not budging here. A big drop closed above the Bollinger. If it closes below, then I will be excited to take the bearish trade. Otherwise, the chances are it will bounce. All right, I think we have spent enough time. Let's.
Can you look at ET?
What is it? ET.
Energy transfer.
Okay. Let me go back to this and weekly chart. I think it is still trading in this channel, right? We had driven a couple of months ago. Went slightly above, came down, tested the lower end. Even the midpoint is working perfectly well here. So in terms of where it can go, weekly squeeze is firing long. As long as it stays above, say, $17, there is a very high chance the squeeze will fire long and it can retest this midpoint or even this upper channel.
Thanks.
Okay. Anything else?
Hey, Pradeep, can we look at bank stocks?
Sure.
Anyone? Maybe
So
BA,
let's
BSE,
start with the
America.
biggest one, JP Morgan. So we had these levels earlier, right? If we put 261, well, it is past that as well. The weekly is also extremely, histogram. If you look at it, banks stocks generally don't make this kind of moves, and this has been a crazy move, right? Close to 100 points in 3 months is crazy. I wouldn't be bullish here. If you're still holding it, hold it. I think it can maybe have a slight pullback into the end of this year. Next year, I mean, this generally holds good for the entire market, right? Although I looked at NDX and SPX and I'm bearish in the next 1 or 2 months, by early next year, we will definitely see new highs. We will see SPX trading above 7,000 maybe. So this is a high that I'm looking for in the medium term, right? In the next couple of weeks, there's no risk to reward here. We need a pullback. maybe 21-day moving average on the weekly, or at least on the daily chart, we should be coming down to lower Bollinger Bands. No.
Does it make sense to sell calls on that? Sell calls on it?
Yeah, just definitely go for it. I mean, bank stocks, you won't find this kind of a move any other time. Best time to sell calls. Sell it 2 months out. I think by that time, yeah, let's see what is the delta that you can take, right? So if you look at JPM, 2 months out, maybe 51 days, September expiration, and I'll look for delta. Everything is messed up here. I cannot see delta. Okay, it's here. Yeah, maybe delta 20. Sell it for September. You will collect around $225 for 100 stocks, which is at around 320. Another 20 points from here. I think that is a fairly good risk to reward. Even if it goes up by September, it has to close above 320 for you to lose the shares, which is highly unlikely. We will see a pullback in the next 50 days for sure.
Good. Thank you.
No problem. Okay.
Can we check Bank of America?
Sure. BAC.
Yeah.
So
Mhm.
it is, I think I had mentioned that in the group as well. Somebody had asked. This is nowhere close to even previous highs. Not a, I wouldn't suggest buying it here, but maybe if it comes down to this red line, which is the 50-day moving average, or slightly below, I would say $47 to $46. It is going to be, sorry, which what is this value? Yeah, around the red line, which is around 46. That would be a good entry point to hope for new highs next year. It can definitely reach its 121 extension or even 168 extension, 161, sorry. So potential to hit 65. I think these are some of the undervalued stocks that we need to look for rather than chasing highly overbought stocks like NVDA and Netflix. I mean, I don't even like to look at those nowadays. It's not in a tradable range. So I think these are pretty good investments. If we buy it on a pullback, we can expect bigger returns. And KRE in general, let's look at KRE. It's nowhere close to the highs it has made previously, right? So excuse me. Yeah, small caps, we can easily target 90 to 105 before the end of Trump's term, in the next 2-3 years. Small caps generally move slow. They are the laggards. When market is right now driven by the mega cap names, and generally when they fizzle out, all the small caps will start going up. That is the general trend. So this might be a late participant to the rally, but there is potential here.
So previously you had mentioned for KRE like 55, and it has passed that. It went from 55 all the way to 60 now. So do you see another entry point in here again in KRE to add?
Yeah, I think, see, right now it is already, I would say, near an entry point. 60 or slightly below 60 is a good entry point. Excuse me. Or these previous highs, right? Which could be another entry point, which is around 59,
Okay.
59 or 58. Has a couple of working orders. I mean, these are all very close by, $1 or $2 difference. So I think you can have a couple of entry points, and it can definitely. I don't think this squeeze will fire short. Small caps are just getting ready to bounce. So even if it comes down a little bit here, I think it's going to turn up very soon. So that should be our entry point to look for new highs next year.
Thank you.
When would you get into those overvalued tech stocks? Like, what would be a good entry point? Or maybe
I
QQQ.
don't know whether we will get any, honestly. It has been a crazy market. We looked at Microsoft chart, right? I mean, if this is madness, really. And right now, NVDA is bigger than all the 2000 stocks that are in Russell 2000 index, which is mind-boggling. So the entire small cap index, which is Russell 2000, it's bigger than that. So I think the best entry point would be 21-day moving average and 50-day, wherever it happens, whenever it happens. That is our entry point. Even then, it will be so overvalued. I don't feel comfortable buying it. There are probably better places to invest.
All the big techs stay away, right?
Yeah, it's better to stay away from big tech. I think the only good one that is out there is Google and probably Amazon. They still have a lot of potential. And
And Apple.
Apple, provided the trade issue gets resolved. Otherwise, it's going to be tough. If it breaks 190, for sure. I mean, it's a risky bet if it breaks 190. Otherwise, I think, yeah, this looks good. At least from charts perspective, it looks good. There is potential if the trade issues get resolved. Um, what else do we have? Meta has been crazy. Today it again went
Oh,
up.
Meta went up like 50, 60
No, I
afterwards,
think more than
after hours.
100, more than, oh yeah, 70,
78,
80
78.
points.
$80. It is crazy, man. Okay.
And this company does not have anything. I mean, it's not like it's coming up with new products, right?
I
Yeah.
burned shorting it today.
Pradeep, from 100 to
Mhm.
800.
Yeah. So yeah, look at this. I think when something is very, very bullish, what is a good entry point? Lower Bollinger Band. But it tested the lower Bollinger Band again today, which is kind of scary, right? This squeeze could have very well come to the
Gone
downside.
from
If it was not for the earnings, this would not have worked. But around it came to around 50-day moving average. I think that is what we need to do. Wait for, not, I wouldn't even say wait for 21-day moving averages in all these crazy stocks. Wait for 50-day wherever it is. Otherwise, don't even touch it.
How do you trade these like you have those ETFs, VOO and all those that have these tech companies and you have good profits in your retirement account. What do you do with them? Do you like
Excellent question. I just moved this week before FOMC. I moved it all to, not everything. I had few at least 10 to 15% in international markets. I left it as is. So 80% of the money I have moved it out of stocks. I have moved it to some safer assets, and I'm going to wait it out because I had something like 15% returns in one account. In my wife's account there was 18% returns. So I thought of taking profits, and you can still do it tomorrow if the market stays up, right? If you are happy with more than 15% in a year, I don't have to do anything. If it doesn't come down this entire year, I'm okay to sit on cash. um, so I have decided that I'm going to enter only at 50-day and 21 days whenever it happens. So
So you look at 50-day, 21-day at what maybe,
daily charts. So if
daily charts. Okay.
yeah, if you look at
And
SPX,
what, 10-minute, 15-minute time frame? I mean, 5-minute, which?
no,
Daily.
on daily.
I think he's talking
No,
about
daily,
investing.
but what time frame? I mean,
The daily is
what
the time frame.
interval?
Time frame is the
Daily is the
daily.
time frame.
Daily is the time frame.
Daily is the time frame, the time interval.
Yeah.
Time interval itself is daily. I hope I'm not confusing. So here,
Yeah.
this is monthly. So when I say
Yes.
I want to wait for
Mhm.
21-day moving average for monthly, it is at 5553. Right? When I say I want to wait for 21-day moving average on daily, this is the interval. And that is at 6282 here, which is pretty close to the current price. I don't feel comfortable even putting a lot of money here. Maybe 20% I will move it into the markets when it hits 6282, because how many points? It just needs 80-point drop from here, right? From 6362, it's about 80 points of drop. It's not much. And when I say interval, it doesn't matter what is the you take 10 years of duration, daily 21 would still be 6282.
Okay.
Okay, so that is what I mean. So in this case, I would put majority of the money back into the market only if I see 50-day moving average. And if it doesn't happen this year, I'm happy with 15 to 20, 15 to 18% of profits. So
Pradeep, how does tie to Bitcoin or crypto generally? Bitcoin or MicroStrategy or Bitcoin?
uh, you're asking a wrong person. I'm not crypto bull, but looking purely at the charts, it is bullish. And looking at the policy of Trump, and given that his sons and his family is fairly invested in it, I think it's going to be a bull market for cryptos in general. But you need to wait for good entry points again. If you get an entry point near the previous highs, close of previous highs in this case would be here, right? 10 102,993 is fairly a good entry point for Bitcoin. I would use the same logic, 21 and 50-day moving averages to enter. If you are a crypto bull, I'm not. I have zero exposure to crypto.
How about BITO?
What is it?
BITO, that's a Bitcoin.
ETF. Yeah, so those ETFs, I don't like to do the analysis on the ETF. Just look at the Bitcoin futures.
Mhm.
That would give you a fairly good idea, because ETFs might be 2x, 3x ETFs are also available, right? So I prefer to do the analysis on this. And if it comes to buyable levels, buy BTIO at that point.
And how about NVDY? It's NVIDIA. They do trading like just play option on NVIDIA only and returns like they return very unbelievable yield.
I mean, so I hate these kind of ETFs, and I strongly recommend everyone, at least who is on this call. I assume that you all know how to trade futures and you all know how to trade options. These products, NVDY, are for people who do not have any idea about options. They just know how to buy a stock, how to sell a stock. Simple buy and sell is what they know. They don't understand strike prices, they don't understand expiration. So, I mean, look at the chart of NVIDIA and then compare it with, it has been in one direction, up and above, right, to the sky. And look at this. And you tell me, why should I buy this one? Because if I'm bullish on Nvidia, I would rather go and buy an in the money call, which is expiring in maybe 2027, when it falls to certain key levels that we just discussed, like 21-day or 50-day moving averages. If it comes to 130, 132 or 133, this is the level I want to buy. I won't even touch it at 21-day moving average. So oh, sorry, this is weekly, right? So let me go to daily. On daily, if it comes to 50-day moving average, which is around 155, and it aligns with previous highs, I can go ahead and buy a call which is in the money for 2027 expiration. And that will give me far more leverage, and I can sell covered calls on it. I'll be happy to have one more session on poor man's covered calls. There are a lot of things that we can do with options. I wouldn't recommend buying 2x, 3x ETFs for anyone.
Hey Pradeep, while we
But
are
it would be helpful if you can do another options.
Sure. I think we are running out of time. I don't want to extend again.
No,
hey,
I like to
on
think.
this one, hey Pradeep, for the next call, can we do maybe bull put bear